what's your biggest drawdown? Like in his trading. And he thought for a while. I said, well, that's how he would talk. Well, I don't think I've lost more than 50% in a day. I mean, it's like, wow. I mean, this is a guy who probably has made more money trading return-wise. And, it's like he knows if you want to get the optimal return, you have to push that bet size and the heat has to be high. And most people can't do it. But if you're wrong and you're too far, you're going to wipe out. It's like, don't do this at home, kids, kind of thing.
Imagine spending an hour with the world's greatest traders. Imagine learning from their experiences, their successes, and their failures. Imagine no more. Welcome to Top Traders Unplugged, the place where you can learn from the best hedge fund managers in the world so you can take your manager due diligence or investment career to the next level. Before we begin today's conversation, remember to keep two things in mind. All the discussion we will have about investment performance is about the past, and past performance does not guarantee or even infer anything about future performance. Also understand that there's a significant risk of financial loss with all investment strategies, and you need to request and understand the specific risks from the investment manager about their product before you make investment decisions. Here's your host, veteran hedge fund manager, Niels Kostrup Larsen.
Welcome to another episode in the Open Interest series on Top Traders Unplugged, hosted by Ed Seykota. In life, as well as in trading, maintaining a spirit of curiosity and open-mindedness is key, and this is precisely what the Open Interest series is all about. Join Moritz as he engages in candid conversations with seasoned professionals from around the globe to uncover their insights, successes, and failures, offering you a unique perspective on the investment landscape. So with no further ado, please enjoy the conversation.
Hi everyone, and welcome back to the Open Interest series on Top Traders Unplugged. This is part 2 of my conversation with Dave Druz. This is the bonus part where he speaks about his time with Ed Seykota and a couple of other things. Some really interesting stories there. I hope you'll enjoy that. I thought it was really great. We appreciate any feedback you have on this. So please let us know if you want. You can always send us an email. It's info@toptradersunplugged.com. But let's get into it. Here is part 2 with Dave Druz. So we'll keep it trading focused. Just speaking about how you design the system, what's important to you, how to trade, emotions, things like this.
I could give you some anecdotes here and there about my apprenticeship with Ed Seykota, if you'd like. Some people find that interesting. You can ask me some questions about that. He's sort of a private guy in certain ways, so it's not like I can tell you everything, but I can give you from my perspective some of the things that I picked up from my 6 months living with him.
Oh, you lived with him. Oh, you mentioned that in Tahoe.
I was his first apprentice back in it was 91 or 90, somewhere in there. And he had several after that. I don't know what he's doing now. We've fallen out of touch in the last several years. But I was fortunate enough to be his live-in apprentice, and I lived with him for 6 months straight and traveled with him wherever he went, and just, picked up what I could and what he shared. And there's some pretty interesting things that he had to share that are different than my approach that some people might be interested in. A lot of the things that Ed does, no one else can do, and you might as well don't even try.
What is this? What do you mean by this?
So you've read The Market Wizards, the original book, right? In 1980s. Anyway. So wasn't it Jack Schwager? Was he the author? I can't remember for sure.
Yes, he was.
But anyway, he gave a beautiful chapter on Ed, and he was, you can tell he was absolutely astonished by Ed when he went to visit him. He visited him in Tahoe, and he saw, Ed's computer on his desk and all the programs Ed was doing. And at the time, it's quite advanced. Now it's, anyone can just download an app and do these things, but Ed had written all his own programs. So Jack assumed that Ed was a systematic, technical trader. That is absolutely the most incorrect assumption about Ed that I think most people take away from that book. Like you use a computer for your trading, if I glean from what you're saying, and we did, and we have algorithms that we follow strictly and back tested everything before we would implement anything, right? So this is what we think of as a systematic trader. But Ed isn't that at all, not even close. Ed is a technical, discretionary trader. He wrote all these programs to support the data presentation that he then used to make discretionary calls about buying and selling. He does have, I don't know what he's doing now. He did have some very specific general rules that he followed that he felt were, sacrosanct to trading. And these are the general rules everybody follows. Cut your losses short, let your profits ride, diversified, so on and so forth. But he did not have a computerized system to do this at all. He would look at the charts each day and then decide what he was going to do the next day.
So he was looking for setups like
he
chart patterns and stuff like that.
He is the best trader the world has ever seen in terms of being able to make money in the markets. Now, no way is he the kind of trader any institution would want to invest in, because his equity swings can be gigantic. And, his job in his mind was make as much money as I can in the markets, and, but he would look at the charts each night and then decide what he's going to do. And it was absolutely amazing. I remember one time, this was back when they were called German Boons, the German Boon chart. We're looking at the charts, and these are chart programs Ed wrote. This was way before you could buy a chart program and just have the thing chart. And we wrote some of our own in-house before you could get them commercially too. But Ed had written his own chart programs, and he had the ability in his chart program to use his mouse and draw, hypothetical what the market might do or what patterns might look like. So one day we're looking at the charts, and we're looking at the German Boon chart. And, my favorite part was looking at charts with Ed to see what he's going to say. So we're looking at these charts, and I said, Ed, what do you think is going to happen with those boons tomorrow? And he takes his mouse and he draws a bar, with a high, low, and a close. Okay. The next day, boons did exactly what he drew. Okay. I mean, exactly what he drew. So he just had this amazing ability to anticipate what the markets were going to do. And this is something that you can't program, you can't teach somebody directly. And when I visited him, or the first, right off the bat, when I'm starting out to be his apprentice, he gives me this little teeny book that he wrote. And I can't remember what it was called. Maybe I can. The Trader's Window. And this book has nothing to do with trading. Okay, he wrote this little book called The Trader's Window. And in it talks about a jade master, and the jade master, somebody comes to the jade master and says, Master, teach me about jade. And the guy doesn't say anything. And the guy comes back and goes, teach me about jade. And the guy gives him a little rock, and the guy looks at the rock and, comes back the next day. And the guy said, well, this doesn't look like jade to me. The jade master doesn't say, he gives him another rock. This goes on forever. It's one of these Zen kind of teaching things. And then after a number of years, the guy that's been coming and sitting with the jade master, he knows what jade is. He knows everything about jade. And the master has basically told him nothing. They just sat together. Okay. So he gives me this book, and little did I realize this is Ed's teaching style. You just hang out with the guy and you see what he does and see if you can do it. So Anyway.
So what was it like on a day-to-day basis? Were you
No,
sitting next to him on a desk, like chair
well,
by chair and watching him?
no. Most of the time, it was just whatever Ed was doing that day. Like, hey Dave, let's go down the hill to Reno and go to the grocery store. Okay, so we'd go down to the grocery store, and that's what we'd come back, and then Ed would play banjo. He's a great banjo player. And then, like at the end of the day, when markets closed, we look at charts. I would take about maybe 10 minutes. That was my favorite part. And then I said, well, Ed, what do you think about this? Well, I think I might buy that. I said, well, where are you going to buy that? Well, somewhere around here. And he draw the little mouth. He never tell me exactly. I said, well, but where are you going to put your stop? Well, somewhere around here. And that's it. That's what we do. And I just watch him do this. And he is very, very big on psychology. And his idea was, like from market wizards, everybody gets what they want from the markets. And markets are a vehicle for people to work out their psychology. And if they have any hidden psychological kinks, they're all going to come out in the markets. This is his idea. And if you've got anything that's screwing you up inside, you're going to bring it out in the markets. And you're going to screw yourself up. So he was very big on trying to understand your own psychology, but it wasn't like he sat down and gave you a shrink session. But he did have these sessions where traders would come together and they'd talk about their problems and stuff like that, just to try to get it out so that it didn't come out in the markets. So he's very big on psychology, and he spent a lot of time with his programs to display different things, but it was mostly just charts, things that we can get easily today, but it was not easy back then. And he just didn't spend that much time looking at markets at all. And during the day, it's not like he had screens, didn't have live screens. And anyway, it was an amazing experience to hang out with him. Not just to watch him trade, but he's so perceptive about people's psychology that you could not hide anything from this guy. If you had any psychological problems or things you were working on, he could see it instantly and he would nail you on it. And it's very uncomfortable, actually, because, most of us have these ego defenses. And, we walk around all day with them and we're fine, but Ed would just nail right through them, because that's how you get to be a good trader. I think it was his idea that you have to make sure you understand your psychology as well as possible, because if your style of trading doesn't fit your psychology, you're going to fail. That's his idea. And everybody has a slightly different psychology. You won't be able to stick to your system if your psychology doesn't match it. We're computerized systematic traders. Well, you take someone who just doesn't have a psychology that can do that, even if it's a fabulous program, they won't follow it. They'll go in and tinker with it. They'll screw around with it. They'll do something, right? Anyway, you understand your psychology well, make sure your system is based on it. Now, he always tried to encourage me to get away from systematic computerized trading because he felt that the returns on that were not nearly as much as you could get from discretionary trading, but technical discretionary trading. In other words, never listen to the news. What does the chart tell you? What does the price tell you? And then make your decisions based on true factual information. He always tried to get me to learn to trade this way. And I said, I can't possibly do that for my investors. I don't have any, back testing. I don't have anything to go on, but he's always encouraging me to learn to do that. Well, after I apprenticed with him for that time, I thought, well, all right, I'll try it with my own money for my own account. And he always also said, if you always have to trade with money that's meaningful in order for you to learn and understand yourself. Like if you're a millionaire, you don't put $10,000 in an account and trade, or you're never going to learn anything because it doesn't mean anything to you, right? So you have to put something meaningful into the account. This is very scary because if you're wrong, you're going to lose a meaningful amount of your equity, right? Of your assets, right? But this is his idea. This is what you have to do. So after I apprenticed with him, I said, okay, I'm going to try this for myself. And so I took, for me, what was a significant amount of money and set up my own account. And I let my investors know, that I do have a proprietary account and it has nothing to do with what we're trading and I'm not trading ahead and blah, 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 just to disclose. Well, so what I did is I continued to run my systems for my investors, but I traded this account for a little over a year. And every day I would say, okay, pretend you're Ed. Okay. All right. You're Ed. You're sitting with Ed. Okay. Look at the charts. Okay. What would Ed do? Well, I'd probably buy it around here. Well, I'd probably put a stop about here. Okay. So I did this for about 15 months, made 300% return, and absolutely went crazy because it was not my trading style. At the same time, my systems made 20% for my investors. I closed the account and I saw a psychiatrist for a year because I so messed up myself by pretending I'm somebody I'm not, even though I somehow was like, the guy that went to the Zen master. I pretended I was Ed for a year. I couldn't do it. So it's just, he has a completely different style than you get from that book. And I think that's maybe one of the most interesting things that, we could bring up if people were interested about it. But we don't need to go into zillions of Ed stories. If you've read all the things you can find on me online, Ed and I once wrote an article together on optimal bet size. Did you ever see that? It's out there online somewhere.
Yes, about heat distribution and these type of things.
There is actually an optimal bet size if you have a system with a known edge per trade. Now, that's the thing, because systems don't have a stable edge per trade. It varies depending on the period of time. And so it's only a rule of thumb. I mean, it is true that there is an optimal bet size. And so that's the thing to take away from that type of a study. You do a back test, you see what the edge is, or what would have been the optimal bet, for this particular system on that particular portfolio. And this is a computerized systematic trading method. He knows how to do all this. It just isn't the way he did it. So we wrote this article on optimal bet size, and the optimal bet size is a lot bigger than most people would want to use, because you go too far and your risk of ruin is douche. You head right into it. But you go too little and your risk of ruin is almost zero, but you're not going to make a lot of money. And so I was curious. I asked him, Ed, what's your biggest drawdown, like in his trading? And he thought for a while. Well, that's how he would talk. Well, I don't think I've lost more than 50% in a day. I mean, it's like, wow. I mean, this is a guy who probably has made more money trading return-wise. And, it's like he knows if you want to get the optimal return, you have to push that bet size and the heat has to be high. And most people can't do it. But if you're wrong and you're too far, you're going to wipe out. So it's a very, it's like, don't do this at home, kids, kind of thing, But that's another really interesting thing that I got from him is, here's a guy who actually made a lot of money in the markets, but he did it by, the rule is, if you want to make a lot of money, you have to bet bigger than you think, but not too big. Enough that you have to take a lot of heat. And most people, this could never, ever, ever do it. And also the other amazing thing is, you think about it, if you're a discretionary trader, you have to learn to deal with what it feels like when you take a big loss or several big losses in a row. And most discretionary traders that do that, even systematic traders, I mean, I know I would feel it. You just feel awful, and it can make you feel down, and it can make it like you just don't want to get up there and swing again the next day, because you've just been hurt. But a discretionary trader, just like a systematic trader, has to somehow cope with this and be able to get up there and still do the right thing the next day, even if he's had a string of losses or one big loss, just recently. And in this regard, Ed was absolutely flawless. He had no memory of what happened. It was like every day was new, and every day was do the right thing. And he was never affected, at least outwardly. You could never see that he was affected by any losses that had happened recently. That was an amazing thing I learned from hanging out with him. He just never expressed anything other than the right way to trade every time.
Sounds like he didn't take any of these losses personal. Like you
Yes.
wipe them from the memory and you
Yes.
just, rinse and repeat the next day.
Exactly.
Did you also do this? Is this something that you learned from him? Is like there's no memory type of thing about the markets?
You mean when I did my year of discretionary trading? Yeah, I just pretended I was Ed every day. I did it for like 15 months. Yes. Mm-hmm. Yeah, but it was just so not me. I can't tell you. It's like, I can't tell you. I don't want to do that ever again.
Yeah, you said this. So then when you had your own firm, did you feel that pain again? I mean, it doesn't mean that you need to take it personal,
from systematic trading. Yeah, I'm not going to lie to you. Absolutely. When I would lose money for investors by following my system, it always hurt. But it's like I'm doing the right thing. My research is really good. It's solid. I have confidence long term. But of course, it hurts when you are in a drawdown. How people handle drawdowns, I think it makes some of the biggest difference in who is successful over the long run. As during a drawdown, your psychology really affects what you're doing. People question their systems. If it's an algorithmic system, they'll go, "Oh man, something's wrong with my system. Maybe I need to change something." What a mistake. That's the worst time to change something is in a drawdown. You have to make absolutely sure that there's something wrong, or you should never tinker in a drawdown. That's not to say that you can't improve your systems. And, it's a good idea for people to always try, but don't let the drawdown psychologically affect your appropriate assessment of your research. So many people tinker with their systems in drawdowns, and you gotta let the statistics play out.
Yes, which is a tough thing to do because it means that you have to trade at the appropriate size when you are in a drawdown. You can't have a drawdown reduction rule where you're all of a sudden, dialing back because it may take ages for you to come out of the drawdown if you ever come out of the drawdown.
So you have to have some way to manage your bet size in drawdowns or in gains, because you start with $1 million account and your bet size is X. Well, when you're 2 million, it should be 2X or approximately. I mean, your bet size needs to change with your equity at some point. If it's day to day or month to month, it does need to adjust. And you can't just, as it goes up, increase, and as it goes down, stay the same, unless you're willing to increase your risk of ruin probabilities. So it's all just follow the system in the drawdown whatever your system is, unless you're absolutely sure that there's something wrong with it.
That's right. Like when you go into a drawdown with your example of the $1 million account and you're down at say 500,000, your bet size should no longer be 1 million. It should be approximately, depending whether you use closed trade equity, open trade equity, but say it's 500,000. That's the base that you're using to size it. But it probably shouldn't be 250,000, which would be too little risk put
Correct.
on to get out of the drawdown.
Yeah.
So that is, a bunch of these drawdown reduction rules, I think they do exactly that. Like the system goes into a drawdown and they start putting on risk, betting smaller than they, should. Simply because they want to get out. We don't want to get into more pain. We don't want to get into more trouble.
Right.
But that also, there's a price to pay, which means you're not getting out of the hole.
Right. And if you statistically, it screws up all the statistics of how your trading system should work. Anyway, yes, I agree with what you're saying there. Your bet size should be proportional to your equity, depending on how much heat you want to take in that particular system. And somehow there should be an automatic adjustment within the system to change the bet size with respect to equity fluctuations and how you time that, and whether it's based on open or closed equity. Open equity, it never works really. People can try it, but closed equity or equity after everything would be stopped out, something like that's much more stable. But and there should be some type of adjustment rule built in. That's my opinion.
Yes, because your open trade equity is also far more volatile. It includes all these, big open profits that you have. And when you then use that capital as a base to size your trades, you have a propensity to over risk. Whereas the closed trade equity is more of a step function that's supposed to go from the bottom left to the top right, and therefore much more stable over time.
I agree. I totally agree with that.
How does one get to be an apprentice of Ed Seykota? Was this because... Yeah.
Okay, so I can tell you how I did. I don't know if he's doing it anymore. In fact, I doubt he is. He did it for a while. And, it's like he tried it for a while. After me, there were a few other guys. I don't know how long he kept it up. But, all right, so this is how it worked. I'd read The Market Wizards, and I got the impression that this guy is a systematic trader, algorithmic trader like me, and I thought, I want to learn from the best. Well, I didn't realize, of course, he's not that, but nonetheless, I wanted to learn from him. And in the book, it doesn't say like exactly where he lived, but you got the idea that it was near Lake Tahoe, Nevada from the book. And so one day I was in the Tahoe area. And this was in the days before cell phones, of course. And this was in the late 89, 90, somewhere around in there. And so I just stopped at a little 7-Eleven store, and there was a payphone and there was a phone book. And so I looked up. So I wonder if Ed Seykota is in the phone book. So I looked up and there it is, Ed Seykota in the phone book. So I called him up on the phone. He answers the phone. He doesn't have a secretary, and I think, and I said, hey, Ed, my name is Dave Druz, and I'm a quantity trader. And, would it be possible to, learn from you or study with you or, have you look at my trades or something? And he pauses for us. Send me your trades. I'll look at them and we'll talk later. And I said, okay. Where do I send them? And he gives me some address. So I go home, and for the previous year, I got all the charts from the previous year, and I marked on the charts, like our exit, our entry point, the size, the stop point, where we got out, all this kind of stuff. So I express mail or FedExed, all my charts to Ed for the last year. And, I put in there, okay, when you get these, give me a call like you said you would, and I'm waiting to hear from you. Well, so, about a week and a half or 2 weeks go by, something like this. I didn't hear a word from Ed. And I thought, I had to get it because I know the FedEx people delivered it. So I called him up again on the phone. And I said, hello, Ed, this is Dave Druz. I talked to you, a week and a half ago or whatever. You told me to send you my trades. I did. I wonder if you had a chance to look at them. He goes, who? It's like, who are you? And I said, well, I'm Dave Druz. Where are you calling from? I'm calling from Hawaii. You have anything to do with my ex-wife's attorney? She's in Hawaii. No, Ed, I'm just a trader. He's yelling at me and he's like, I'm tired of talking to attorneys. I said, no, I'm just a trader. I sent you charts. He said, no, I don't remember anything. And I said, and I got like sort of upset with him because I worked really hard on these charts and he told me to do it. I said, okay, look on your desk. I said, look on your desk. Do you have a FedEx package there? He said, well, yeah, I got one here. I said, Ed, open it. He opens it and he says, oh, all right, look at these trades. He says, you trade a little bit like I do. He says, why don't you come out here and be my apprentice? That's how it was. That's how it went.
Funny. I thought you were working together at Commodities Corp even earlier, but you didn't overlap there.
We didn't overlap at all. Not a bit. Not a bit. Nope, that's how it worked. And so, and I said to him, okay, don't forget that you told me to come out there to be your apprentice because I got to get a plane ticket. I got to change my whole schedule. I got to fly out there. And do not forget, you told me to do this, because I could just see this guy like totally forgetting the whole thing. Right. And so, and I thought I rearranged things and I did call him back and said, we're still on this, I'm planning to come. Yeah, I'll come get you at the airport, and so anyway, that's how it started. But
funny, I didn't know you were already in Hawaii back then. I thought you were on the East Coast at some point.
No. I was in Hawaii. Hawaii and Alaska is where I was. And anyway, so when I went out to live with Ed to begin with, living with this guy was one of the most amazing experiences of my life. He had two places in Tahoe, one gorgeous, huge house, and then one condominium, both on the lake. And so he was staying currently at the condominium, and he had a big room, a big, like, beautiful living area that looked out over the lake with his main desk with his computer on it. And then he had this little room in back, and the little room in back had no heat, and it had a little bathroom, but, it wasn't heated, and the toilet seat was freezing butt cold. And anyway, so I got that little room in back, and my job was to clean data for him. So this was in the day when data would, get end of the day downloads, and there was a lot of bad data. And so each day I would look through all the data and try to, that data looks bad. And then I try to find what the good data somehow and tell him, and then totally forgot about me. 100%. Didn't even know I was there. Okay. And I would have to come out from the back room, to see him at his desk. And I would come out and he'd go like, oh, who's this guy coming out of the back room? I said, hey, Ed, you remember me? I'm apprenticing back here, cleaning data. Oh, yeah. How you doing? I said, Ed, is there any food around here? Like, I hadn't eaten for a day or so, I was expecting he's going to come back and say something. Is there any food around here? He goes, probably something in the fridge. And then he goes right back to this. It's like, didn't even know I was there. And this went on for a while, and then the whole thing is like, you couldn't make it up. You could not make these stories up. But anyway, he finally realized that I was actually there, and I did have some value at cleaning data. And anyway, we got to be good friends after a while, but it was quite the experience. So anyway.
Amazing. Thanks for that, Dave.
Yeah. Yep. Fun stories.
Fun stories.
Let me tell you one final Ed story. So Ed has this idea that we limit ourselves in our success in the markets because we don't believe that we are deserving of great success, or we feel that we're not worthy, or that we're not adequate or not good enough. We hold ourselves back. That's one of his psychological ideas. So he's always trying to clear our psychology and help us feel that we do have the ability to succeed. And we, if we have that mindset, we will attract the success. And if without that mindset, it works very much against us. So I got this. I understood this. Well, so we're now in Maui, where he also had a house. And so I'm in the back room again, still doing my stuff, getting ignored almost all the time. But nonetheless, come out, look at the charts in the afternoon, go with him to the grocery stores, do errands for him because he didn't like to drive. So I would drive and he would tell me where he wants to go and he would sit there and doze off. Well, he knew that I liked cookies, to snack on cookies, because we would sometimes go to a grocery store and he'd say, oh, what do you want to buy? Get some food. And so I would, I'd always get some cookies to snack on. Well, one day after I'm sitting in back forever and I come out and he'd just been ignoring me forever. But still, we would go for walks on the beach. We'd talk about trading at this point, and we were getting to be friends a little bit. And he was trying to instill in me that he said, Dave, one reason you're probably not as successful as you could be is because you're limiting yourself. And I said, yeah, well, okay, if you say so. So one day he said, okay, let's go down to Foodland. And Foodland is a grocery store. So in the evening. And so we take a drive down to Foodland. And I'm getting perturbed that I'm with this guy now for 4 months and he just barely even recognizes me. So we go to Foodland. He could tell that I was feeling a little miffed and a little discouraged. He says, Dave, why don't you buy yourself some cookies when we're in Foodland? And I said, oh, I'd love to buy some cookies. How many cookies can I buy? And he said, as many as you want. Buy as many cookies as you want. I said, really, Ed? As many cookies as I want? He said, yeah, as many cookies as you want. So it's like trying to be my buddy. So we go into Foodland. As soon as I get in the door, I go up to the manager's desk and I say, I want to buy every single cookie in the entire cookie row in the whole store. And this man's paying for it. He turned green. And the manager says to me, are you serious? I said, yeah, he said he's going to buy me as many cookies as I wanted. And I want to buy every cookie in this store. And Ed lives by his word. He's a commodity trader. If he says, buy 1 million beans at such and such a price, he's going to stick to it because that's what he said. And I knew that. And so we bought every single cookie in the entire store. And the guys brought these big pallets out, and they put them all in the back. And when we left, there was not a single cookie. It was an entire row of a grocery store, all the cookies in the grocery store because he gave me his word. I thought he's trying to teach me to have no limitations. He says, I can buy as many cookies as you want. You sure? I double checked it. You're paying for yes, every cookie, And I don't know what it cost him, like $10,000 or something, which might not have been, not a whole lot for him, but still, he never expected that. But he was a man of his word. He kept his word. And then he said, what am I going to do with all these cookies? I said, well, Dad, why don't you donate them to, the homeless shelter or something? I said, they're shelf stable. Someone will And so he does. And then they interview him for the Maui newspaper, like this benevolent guy donates all these cookies.
He got the benefit out of it.
Yeah, he got a big benefit out of it, But ever since then, he never ignored me and I gained his respect. So and
How did you put all these cookies in his car? What type of
We didn't. We kept them in back of the store. And the next day the vans came from the homeless shelter, the church or whatever, and picked them up and took them away.
Got it. Funny story.
But that's that just, two things, don't limit yourself and always keep your word, are in that story.
Perfect. Well, great, Dave. That's going to be fun on Friday, 48 hours from now. You'll be a great podcast guest. I can already say that now.
Well, I hope that I can say something that will help your audience either trade better or not lose as much money or be a better person psychologically.
Thanks, everybody, for listening. This is the end of part 2. I want to once again thank Dave for coming onto the Open Interest series. I know this has been a first for him. It's been fantastic speaking with him for the first time. I really enjoyed it. And I'm sure that you can learn something valuable about trading from the conversation that I've just had with Dave. So we'll also include some of the most important points and summarize them in our show notes. As ever, if you have any questions, please contact us. We're always happy to respond, and we will. I want to thank you again for listening, and see you next time.
Thanks for listening to Top Traders Unplugged. If you feel you learned something of value from today's episode, the best way to stay updated is to go on over to iTunes and subscribe to the show so that you'll be sure to get all the new episodes as they're released. We have some amazing guests lined up for you, and to ensure our show continues to grow, please leave us an honest rating and review in iTunes. It only takes a minute, and it's the best way to show us you love the podcast. We'll see you next time on Top Traders Unplugged.